Hey everybody, this is DayTraderRockStar, and this is the high probability watch list for the week of, let me get my correct dates on screen here. It's going to be January 23rd is next week, January 23rd, week of January 23rd. Today is the inauguration day. Behind me on the screen, I see I'm following all the hoopla going down in Washington, the inauguration of Donald Trump, 45th President of the United States. Now, we're not going to go into that, but just remember that will probably have a bigger long-term effect on the markets. And with our long-term look at the markets as a bias, pretty strong bias to the upside, a lot of these setups, again, will be on the long side. As, again, you're going to see some great setups, and we're seeing them already. Oh, where do we even begin? There's a lot going on. Paul's on the mic. I'm starting this early Friday. I'd like to get this out before the market closes so you can take advantage of some of these. The first thing that I want to point out is Pfizer. Pfizer, we've been trading multiple times, and let me backtrack just 1 second and go over the purpose of this HPS watch list. This HPS watch list is high probability watch list. Every single day I'm on the radio and we talk about the trade setups all day long. We try to make something happen every day. But the HPS setups, this is the cream of the crop. This is what deserves to be on this list, I would almost go far as to say that what goes on this list deserves to be traded, because these are setups that have been sculpted out of years of trading. These setups, these patterns that you're going to see, these technical levels that all converge. There's a reason and there's a rhyme. You see certain things move at certain times. We identify those, and that's where you need to get in. Simple as that. And what's great about it is it's very easy to show you it and see the reaction of it. We have an HPS, we have a tracker. You can see the past charts and things. I'm not going to go into percentages of how well this works. But this is, again, something you want to be a part of, these stocks. So if it ends up on this list right now, it's the real deal. It's the cream of the crop. I'm not going to put junk down here. We might talk sometimes about just ideas and stuff, but officially, if it appears on the HPS watch list, and when it goes on this chart, it gets, it ends up going on our HPS site right here. And these are some of the old, again, you could scroll down, and these are all the HPSs that go out on the video. You could scroll all the way down. There's a couple that get stopped out, but the majority of them are just rock solid. And some of them are still active right now. NIB, the IFF active. We have some that are watching. You're going to see some new ones go on there. Even the VFC today, actually, I said I'm still holding this, and I actually expect this to move higher. And we've, again, I've traded this stock before, so you could actually go back and, and kind of talk about the idea of, continue to wait for quality names to set up certain repeatable patterns. And when, and then setting the alerts and following through. You can see these have been great setups here. Now this one is the 5380 buy trigger that activated a couple of weeks ago. And we actually broke down on that. And I'm going to come back to this trade right now, but I'm just showing you this is where the stocks will end up if it's an HPS setup, and we'll go from there. So let me bring this back over here onto our Pfizer, because that Pfizer is going to end up going here. Because, this is a playbook play also. And another qualification, what we call are these playbook plays. To be an HPS setup, it has to be a play. It has to be this. The criteria has to be so tight and so exact that it falls within this range, and we call it a playbook play. And all these playbook plays are defined for you on the show, on the membership forum. I have the videos on that, and this one is called. This has a couple things going for it. It's a channel 1, 2, 3 channel breakout with a stochastic rotation. So we call it a channel breakout stochastic rotation. But whenever you have a rising trend line and a rotation back down to oversold levels, that's a double trigger right there. So everything here, especially this upper trend line is the key here. It's definitely the key because that channel has been broken to the upside, and now we're starting to build this new channel. And we could put a measured channel move up here, almost all the way up here past 35. to see this rotate back up, get back above the 200 period moving average, and continue to push high. This is why this is an HPS setup. The setup here on this, again, I would put a stop underneath that previous candle, which would be down about 31.40. It looks good right here off the trend line. And that's all she wrote. The one thing I would say about drug stocks is drugs and other companies sometimes come under the scrutiny of the government. And, as we know back here a few days ago, when Trump was making some comments, he made some comments about the drug stocks, and they all got hit pretty good. So sometimes you get a little setback. But typically, if it's a quality name, it's going to come right back. And if it gives you the signal, that's where you're really counting on it. But there is the chance of maybe a focus on this. If you don't like it because you're afraid of the, maybe the administration focusing on prescription costs and stuff, and these might hit some of these drug stocks, then, it's your choice to stay away from it. That's up in the air. We don't know. We can't predict that's going to happen. But this is a great setup right now. All right, it looks much cleaner now as I got it on the HPS chart, and we're getting it sent out into the room, so hopefully you got that. Looks great. It actually looks fantastic. Pfizer right now, 32.10, pushing at the highs of the session. So I want to get these out a little early, so I'm posting those in the I'm actually sending any HPS out on the email right now that I'm adding to the list, so you have an early update. So we're going to continue on, okay? But that's what it looks like. Very, very clean. Upper trend line. It's a dual playbook setup, means two plays. I don't even put this downward channel line in that we broke out and then we retrace back. I did on the video, but on this video before. All right, so let's continue. All right, history has been made. The president has been sworn in. Just had a little after 12 o'clock, and you can see small reaction to the downside, but I just actually picked up some calls into this. Like I said, I just discussing it on the radio too. I think we get a positive bounce off of the election, but it really is one of the tougher calls here because it's just an event and it can be very choppy around this. But I want to take a trade into it. I have my trade posted there. Picked up some SPY calls going into next week, and again looking for a positive reaction over the weekend and into Monday, and we'll see where we go from there. And again, we're in right in this level here. So if we take a look at the setup here, we just got in right around 12:30. All right, next up on the agenda, the HPS agenda, will be the Kellogg here. Now, Kellogg. We're going to, what this one is, a double bottom, downward channel, double bottom reversal. Or, what's going to happen is whenever we see, there's two types of things that happen in these channels. Either we get a divergence reversal or a double bottom reversal. Those are the highest two patterns that appear in downward channels. And these are predictive patterns. The patterns, if I saw a divergence set up in this stock on a downward channel, I would predict that channel is about to be broken out to the upside. The divergence typically puts in the bottom, and it typically tells you the area you need to be in, and it's very easy to calculate you're going to break out. In this case, we have a double bottom. It's not a divergence, but it's a double bottom. It's almost the second best setup in a channel that I would look for. So it's there. You got to put it on the screen. You got to put it as there. Some other things here that are looking really good. First of all, you have the stochastic rotation on a daily, very strong. We're holding recent lows. The channel's good. Excuse my cough. The daily. The weekly, actually looking interesting. This actually could be set up as a weekly divergence too. I wish you haven't had that in this stock for, last time you had a weekly divergence, actually you have a slight one here. It's not above that 20, but this one looks so much healthier. You know what? Can't deny that this looks like a great setup that's brewing. The one thing I want to say is on the daily, you have a potential for a divergence to happen here. And if we got a breakdown here, quick breakdown for whatever reason, one more test down here into that lower area of that channel line, most likely we'll probably drop a little on the stochastic, but rotate back up, putting in a higher low, and we'd be taking out that lower low. I don't think that's going to happen. But because I have this kind of spear here, this yellow circle, understand bird's eye view, this is a great zone to be in. It moves a little lower, yeah, but it's still going up from here. I'd say you get anywhere in this zone, 3 or 4 months down the road, you're going to be higher, maybe even faster. We're looking at this as a pattern and maybe a trade. When we talk about HPS, again, we're talking about getting in before the move, but having the move happen very soon after. We want to get in there and wait for 5 days before it moves. I want to be able to predict that move right away. Usually divergences do that. Double bottoms, this is more of a swing trade, but I would expect it to work out pretty soon. And we'll see what happens next week now that the inauguration's behind us, and this will be a big test for the markets. I mean, a little downward pressure would probably put a little pressure on it, but not necessarily. These things are set up to go higher. Kellogg is probably the best bet for next week. Right now, the futures are starting to roll. You hear those crickets starting to roll here. A lot of crickets in the background. Turn off the background here. And I just put the call, so I'm expecting some good stuff here. If I was on the mic today, I'd be screaming and banging the table. Paul's doing a good job, though. He has two. Take a look at the, and I'm kind of digressing from the HPS, but take a look at the friggin' tradeometer today. I mean, every buy signal, boom, boom, boom. And remember, this is not tell you green you buy, red you sell. No. These are trade entry indicators. So green is a long, and red is a short. It's not, not get in, get out, because you won't get those short setups. But you will get a buy signal or something like this. But you have to understand that our techniques and our criteria require us to take this off based off the time frame. Now, this looks like a great trade. From 12:15 up to maybe 12:20. Maybe it's a 10-minute trade. Basically, it started right here and popped. So you had an alert. You had an alert right there. You put it on my screen. Let me bring it over. The market starts to rally here. So that 12:15 was right here. This is where that alert came in. It's a circle, by the way, Johnny. It's a circle. Remember, circles represent upside or buy signals. So here's your buy signal. We also pay attention to that rotation. So when we talk about exit criteria, any signal that's based on generated on a 1-minute time frame, you have to use that 1-minute rotation. Make up your mind. Do you want to use the 9-3 or 14-3? Both work good. 9-3 is a little bit faster, sometimes a little bit easier to get to your target. But most of the time, we just use that 14. Your target is there. When this thing approaches that 80, you should be looking to take profits, because you know there's going to be a rotation back down. There's no guarantee that this channel hasn't continued, because we're basing all this off that 1-minute time frame. If we're basing on the 5-minute time frame, then I would have more information to go by if we want to hold it a little bit further. But this is the beauty of this, is being able to have the discipline to take it off. Now, Paul's been doing, I've been talking a lot about Paul and his trading, because what I've noticed him do recently, and he's been doing great, he's also been taking the trade off without his target being hit. He goes, I'm looking for 2 points. I'm looking for 2 points. I took it off for 3 ticks. When I see him do that, I know now that he is on, he's in the zone, because when you have the discipline now to take a trade, no, you're right, but you can't predict where it's going to go, but you can see where momentum is topping out, and the majority of the time that happens. If you go back and just do chart testing and back testing, you're going to see the odds in the favor of pullback. So when you could take off 3 ticks looking for 2, you're a winner. You have gotten to such a good level in trading that you really have to just be worried about bad beats, because the techniques are there for your entries. The hardest part is your exit scenario and the exit criteria. Greed and patience. Those are the 2 things. Greed, the biggest enemy of a trader. Patience, the greatest ally of a trader. Having patience to wait for those setups, but having the discipline to get out, not expect too much. Trade your time frame. That would help a lot. So, this is just beautiful. And then, of course, our last alert right now, I think Paul's trading this, this last alert came in right here. And you're saying, what alerts? Well, these are the tradeometer alerts. All right, so if you're not familiar with the tradeometer, go to tradeometer.com or just ask us about it. And if you're a member, of course, you know, just, and you want to try it out, just hit me or Paul up, and we'll give you a trial of it. But it's definitely a tool that I would be having permanently, especially if you're a short-term trader. Now, I could use this using trading SPY calls too. If you don't want to trade futures, you can trade something less aggressive. You know, each one of these signals are going to radiate across anything that tracks the S&P. So you're talking about SPY common shares, the ETF. You're talking about calls and puts on those stocks and any other combination. As long as it's tracking the S&P, you have ETFs. You have leveraged ETFs. It doesn't have to be the SPY paying $200 for it. You could get a leveraged ETFs like an SSO or something like that and trade that and get 3 times the return of the S&P without paying as much for the stock. And, you know, hopefully you understand where I'm coming. If you're not understanding of some of the terminologies, just ask me a question. You know, the ETFs and the pro short shares and the pro long shares and the leveraged ETFs will give you a return. You trade basically off of the, you know, the ES and NASDAQ, which would be the the Qs and the Dow, the diamonds. But then you have other ones that are leveraged even more. Price comes down, and it moves. You know, it's supposed to move in sync with the underlying index. So, but it will give you a return that's either double, 2 times, or 3 times. So imagine having a great setup and saying, "Oh, I'll take the 3 times." 3 times. Let me see what it is here. Maybe I can pull it together right now and show you on the chart. Might be better. Maybe I'll pause this and come back to it. Anyway, you know, we're going higher here, and we're loaded longs. Not many shorts here that I'm looking at today. Let's get back to the watch list. I could go off and just talk about the markets all day on this, but I have to get into, you know, the fact is that this is a very concise. Let's not waste your time. You know, I get the HPS watch list for a reason, to talk stocks, and that's what we're going to concentrate on. So again, double bottom. Let me set up the chart. I think you're great here. I think the worst case scenario, you break down a little, you take out the lows, but then it reverses. But I say it stays within this sphere. So you could take a chance of making it, you know, letting it set up. Might actually happen. If it did, I would double down, considering I already got in a little. I don't think it's a bad area. And the other thing I wanted to mention is that 200 period moving average hanging up here. It's been a while since we made a run towards that. And this stock doesn't typically stay underneath it. You know, and we like, you know, this is kind of similar to the Colgate, which we just recently traded. Now look at the move on Colgate. I'm watching the press. There's Colgate, and again, this could have been considered a double bottom, you know, channel. Also, we kind of came down to channels, a little sloppy channel, but we started to hold this consolidation. When we start to hold at our double bottom, the odds of a breakout are there. Not as great as when we have a divergence channel, but this is right up there, one notch underneath it. So that's Colgate right now. We already got out of that. We took that off at $68. Where did it go up to? $68.10. So that was an amazing trade. I think Kellogg's going to be the same thing. It's just that we haven't made the move yet. All right. Let's give you the chart on that. All right, here we have the Kellogg. And again, Kellogg's going to be the best bet of next week on the double bottom divergence. Now remember, I was going to put another buy zone underneath here. Just remember, make your own notes and stuff. There is a shot that this actually takes out this low, pull back a little further into the channel, but kind of give us a real perfect divergence, setup, because you can see the stochastics here kind of rising higher, and we're still, chopping around the lows. Honestly, I think we break out to the upside on this, but for whatever reason we break down, I would be looking for a divergence, and if that divergence played out, that is a slam dunk trade. Now, take steps to take, and I will be, so you don't have to worry about. But again, this is for a trade right now. Very close. If we made that a sphere of influence down here, a move down, a move up, I think there's a higher probability of a breakout and a move back up there. So that's where we're leave that one hanging. Again, this is what you're finding on the HPS setup. So these will be automatically alerted when the price zones are hit, profit zones, and their stops. And you'll get a follow-up email and text or whatever you have on your subscription. So that's it. And then at this point, I'm actually going to stop this portion of the video because there is going to be some more HPS setups here, and I want to, and I focus these on to the members of Day Trading Radio, but I like to put out a couple of things and show you what you guys got here. So if you're a member, continue to just don't worry, you're going to hear me come on more right now. And if you're not, well, DayTraderRadio.com. Oh, and one last thing. Watching the inauguration today, going into next week, there is this volatility that overhangs the market for events like this. We've never seen anything like this. I listened to the speech. Personally, I think this market is going to react really good to this administration. I think we're going to, and I've been watching it today because we're trying to decide if we're going to kind of buy the, sell the news event here, or is there something different going up? And I just feel underneath there's a sense of pride and a sense of hope. You have to look at this time right now, beginning of an administration which could last 8 years. What's the market going to do? Well, we're very low as it is right now. Things look good. I mean, I am pretty excited about being in the market at this point. So my personal opinion, we're not going to see much of a pullback. I think even starting later today, we could actually start to see a push. And I'm not saying this push is going to go up every single day for the next 365 days. No, there's going to be things out here. But the overall tone here, the beginning here, something's going on. And I'd be watching more for the upside. So it's a good time to be around and a good time to be trading. And that's my opinion. But we're still, bring you the right setups. That's the important thing, is identify the high probability setups, even if the market's in a pullback phase. And even if the market tells us, hey, we might have a little pullback here. That's not an issue. I'll see you Monday.